Ladies and gentlemen, stop what you're doing and listen carefully. Everything we believed about the silver market, the narrative of people versus banks, is wrong. For 15 years, we thought the bullion banks, led by JP Morgan, were trapped in massive short positions and that when silver surged, they'd collapse. Today proves otherwise. JP Morgan didn't get squeezed. They orchestrated the rally. Deep analysis of warehouse receipts and vault data shows that they closed their infamous shorts and flipped net long. They now control an astonishing 750 million ounces of physical silver, more than any private entity in history, including the SLV ETF and the Hunt brothers. Paragraph. Think about it. 750 million ounces is roughly 62.5% of global annual silver production. While the public screamed about manipulation, JP Morgan quietly amassed the metal. Every paper-driven price suppression was a tool to buy silver at discounted rates. They weren't saving the dollar or helping the Fed, they were securing physical silver. Now the accumulation phase is over. The largest private hoard in history is in their vaults, and they want prices to skyrocket, not collapse. Every dollar silver rises adds roughly $750 million to their balance sheet. From $30 to $79, JP Morgan hasn't lost. They've gained billions in unrealized profits. Paragraph. The story of Bear Stearns is key. In 2008, JP Morgan acquired the bank and inherited its massive silver shorts. What seemed like a toxic burden became a strategic weapon. Instead of closing those positions, JP Morgan nurtured them. Every time silver demand rose, they used the Bear Stearns short to depress paper prices, forcing miners and weak hands to sell. Meanwhile, they scooped up physical silver quietly. Over 15 years, they created a private London vault and absorbed every ounce of silver they could find. The retail investors and miners unwittingly subsidized JP Morgan's fortress, building the foundation for their dominance today. By late 2025, they reached the tipping point. Mines were running dry, deficits were looming, and industrial demand surged. JP Morgan systematically closed out their shorts and went net long. The vertical price surge we see today is the result. Their 750 million ounce position dwarfs the COMEX registered inventory, which is only around 30 million ounces. They now control 25 times more silver than is publicly tradable. The market's previous price suppression machinery is gone, replaced with a bank incentivized to drive prices higher. The wind that once blew against investors now propels the rally forward.
This accumulation is about more than paper gains. JP Morgan prepared for industrial panic. With solar and EV demand surging and China imposing export restrictions in January 2026, the global supply will be halved. Companies like Tesla, Apple, and Samsung will have no choice but to source silver from JP Morgan. They've engineered a perfect trap, a geopolitical blockade from the east and a private hoard in the west. The industrial sector is now hostage, forced to pay premium prices. JP Morgan has created a controlled, deliberate corner, unlike a chaotic short squeeze. They dictate the supply, the price, and the timing. Consider the scale. Global annual silver mining produces 830 million ounces. JP Morgan holds 750 million. That's nearly 90% of all silver mined in a year. Compared to COMEX inventories, their stockpile is 25 times larger. Structural deficits of 200 to 250 million ounces a year mean the market must go through them to acquire metal. Their hoard alone can bridge years of deficit. The consequence? The industrial supply chain cannot function without their permission. Tesla and Apple are effectively in negotiation with a bank, not a market. JP Morgan has transformed silver from a commodity into a strategic asset they control entirely. Retail investors benefit in an unexpected way. By holding physical silver, they are aligned with the largest whale in the ocean. Every ounce in your possession is an ounce JP Morgan doesn't control, giving you leverage alongside them. Meanwhile, tech companies relying on just-in-time manufacturing face the full force of the squeeze. Elon Musk's tweet, "This is not good," signals recognition of the trap. Silver scarcity threatens production, and the bank controls the price. Industrial buyers will pay whatever is required to secure supply. The wealth transfer is underway, moving from Silicon Valley to Wall Street, from software to atoms, from paper to physical reality. The $100 silver target is now a floor backed by industrial necessity, not speculation. Panic buying from industrial users will reinforce the upward trajectory. Tesla, Apple, and others cannot risk being caught without silver. They must secure it, driving prices higher. JP Morgan doesn't need to sell immediately. They can let the market tighten and watch premiums rise. This is a controlled ascent, extracting maximum profit without crashing the system. They are managing the squeeze to protect their long-term gains, ensuring tech survival just enough to continue paying tribute to their horde. The geopolitical context amplifies the impact. China's export ban begins January 1st, reducing global supply dramatically. JP Morgan anticipated this months in advance. Their 750 million ounce hoard ensures they are the only Western source for critical industrial demand. The alignment of incentives between China and JP Morgan creates a scenario where the West has no alternative. Tech companies cannot bypass the bank without crippling production. Meanwhile, the price of silver rises as the physical market tightens. The industrial floor will hold, forcing companies to pay escalating prices, guaranteeing JP Morgan extraordinary profits. This isn't just a commodity play, it's a monetary hedge. JP Morgan's hoard is a counterweight against the declining US dollar. They are effectively long silver and short the dollar. Inflation and money printing will amplify silver's real value, creating a feedback loop of rising prices. Every paper dollar-denominated contract loses purchasing power, while silver's intrinsic value rises. This position allows them to profit from both physical scarcity and fiat currency depreciation. The $100 target now represents not only supply-demand dynamics, but a monetary reset. They are insulated against currency collapse while the rest of the world is exposed. Investors must act strategically, expect short-term manipulation to shake out weak hands, watch premiums. If physical coins rise while paper dips, the rally is intact. Industrial panic will push prices higher as companies scramble to secure silver, sell only for real assets, not dollars, because paper is devaluing. The era of cheap, infinite commodities is over. Those holding physical silver are now at the table with the giants. JP Morgan, China, and industrial users set the stage. The price will reach triple digits not by speculation, but because scarcity, strategy, and industrial dependence demand it. Hold, watch, and benefit.